So we are recording. Good morning. It is Saturday, February 27th, 2021. This is the Triple Rim Lambos Trading Group open discussion. Quick disclaimer for the video. This is not investment advice. This is just a bunch of us sitting around talking about stocks and things. My name is Mike Taylor. I'm your host for now. I'd like to welcome everybody. So I'm going to pull up my, by the way, it's the presentation for this is in my Dropbox, and hide a couple things here. You can see what I've also been doing, going all the way back to 2003 and trying to find an ancient copy somewhere on the internet of an old Windows server that's specific to this software that my new client wants to use. One of my specialties is having been in the industry so long, as I know a lot of old software. So I often get hired because of that. And even though they tell me I'm going to be doing new and amazing stuff, I always end up doing old stuff because I'm one of the few people that knows how to do it still. So put that away, let's see. Bunch of boring stuff that I do for a living. I want to pull up, I put a lot of our trading stuff over here in its separate windows just to keep it separately. Couple of people I know. I'm personally trying to educate myself more on options. I've been fairly consistent in getting wins at stocks and or stonks, whatever you want to call them, whatever age group you're in. But right now, my learning adventure is taking me down the options path, and Yakubu has been really good for the group. As far as like explaining things to us and telling us how he does it. And I think Elaine and maybe it was Orange Fred, you guys have done really well. Like somebody was saying they turned their like $150 account into like 10K. So, you know, good for you. And I want to do that too. So I found a couple of sources online, things like that. These are good. I use Thinkorswim. I think a lot of people do. Schwab has an options app or a website, as does E-Trade. We've all seen Robinhood's. For anybody who still has a Robinhood account, I think we've all seen the options panel. We've gone over this panel with Yakubu in a few instances, and the things that we're looking for, of course, are high volume, high open interest, and we set a higher delta. I'm going to have to go back and look at some of the videos, but the delta needs to be up there. I believe was the threshold above 50, somewhere in the 70 range. But again, I have to go back and check that. So right now, my focus, put this where it's not gonna, my focus has been on options trading. So for anybody who doesn't know about it already, FinViz is a great source for doing for checking out stocks, checking out tickers, doing screeners. Their screener is a pretty good one too. You know, if you have a Thinkorswim account, use their screener because it's simply a better tool. But for those of you who don't, this is a good free tool that allows you to go in and let's say we want our average value to be, I don't have a paid for account, so you can do 500K to $1 million. You can pick your sector. We want a volume of over 1 million. And so anyway, you can see as you change the filters up here, and this is the free version, so you get lots of advertisements for Jim Cramer, who is, my opinion is, Jim Cramer is to stocks what Judge Judy is to law. He's a hack. But we're looking for, million volume plus. One of the things that Yakubu looked for in our previous discussions was this percent change, and this is something that you can find in Thinkorswim, but I'm still looking to match it up here in FinViz. So we're looking for a percent change of 30%, price under $1. Current volume, we'll switch this back to any. So, wow, we've pretty much narrowed it down to one penny stock that's out there that meets our agenda. So VGZ, everybody, if you want to put this on your radar, since we're doing this live. What are we looking at here? Short float, 24%, not great. Volume's good, price is low. It's had some good price action up to $1.44, currently sitting at 93. So again, FinViz, this is a tool that I recommend. Oops, not that guy. Nobody saw that. Besides, that's all readily available on the internet. Back here though, iVolatility, one of the things that anybody who's good at trading options knows that you got to watch volatility. High volatility days, you could lose a lot. Low volatility days, you might not see any gains at all. So again, these are just some tools. I recently hooked up Seeking Alpha to my, again, the free version. I don't like paying for software. And honestly, I think that, again, this is my opinion, but the subscription model that has been created in capitalism is basically financial death by 1,000 cuts, right? Financial death by 1,000 subscriptions. Anytime I can find a free version of software, I'll take that over the paid version. Although I just did drop a yearly subscription for Investor Observer. So I now have a premium account with Investor Observer because I found that, like VectorBest, they've got really good indicators, but theirs are more number-based. They give you an actual factor. So this is why I decided. And plus, they were having a half-off sale. So Mom always told me never buy anything at retail, and we don't speak much, but I do listen to that piece of advice she gave me. Anyway, so this is Investor Observer. Again, I kind of jumped right into some of the tools just because, again, this has been my adventure this week, trying to get myself ready to be more active in trading options. But what I was going to say is in Seeking Alpha, of course, the tab is right in the middle where it keeps pulling that thing down. Seeking Alpha, even in the free version, you can hook up your brokerage accounts using Plaid, the brokerage connector. And I like this because it has a summary of all of my holdings. It has a nice, easy to read layout, hoverable charts, things like that. But what I end up doing is just looking at my changes so I can see which of my guys are doing well and which of my guys are doing terribly, right? So HCMC had a really bad day on Friday. All of those of us who are holding HCMC, who bought it really, really low, just keep holding on. Let's see what else. Oh, this is a fun one. It's more visually appealing than anything. It's kind of it's creative. There's not a whole lot of controls that you can do, but this is called the bubble board. And what it lets you do is you build these little boards where you can um, go in and you can add the symbols or the stocks that you want. And what it'll do is it'll give you these nice little bubble charts of the day and how they're performing around each other. So these are some sector ETFs, right? Active Trust, uh, Spider, BlackRock Institutional Trust, and a few others. And so these are fun. Um, a lot of these things I'll find lists, kind of like you would put a watch list together, or I'll take something from a watch list and I'll just build them. Um, this one is way out of date because I certainly don't hold Virgin Galactic right now. Thank God, because it's down 12%. Johnson & Johnson is surprising me because for a company that just got approved yesterday for uh, FDA approval, you would think that that stock would skyrocket, but instead it did the exact opposite. So, someone in the group tends to say, buy the rumors and sell the news. And this is a great example of that, I guess, because boy, did it drop right at the end of the day yesterday, even though they got approval to be the third one dose vaccine. I mean, it's a one dose vaccine. Like, why isn't that like sending the stock through the roof? I don't know. Just to make sure that we're staying on topic here. Right now, let's see how many we got here. I got a few. When you came into the lobby, I have everybody on mute when you come in, just because there's too much noise and I get distracted and my brain works funny like that. But if anybody wants to chime in, please unmute yourself and feel free to just contribute to the discussion. This is an open discussion this time because I didn't really feel like putting something together. We can talk about the type of traders you are. We can talk about how your week went. We can talk about what we want to do together this week, if there's any plays that you guys have in mind. We can talk about platforms and tools, which I was just doing. I kind of jumped like way back into the presentation here, but only because I'm talking about my adventure this week. So again, if you want to unmute, you guys can. This is an open discussion. So open discussion means you speak too. I heard somebody. Didn't catch who that was. I'll put this on the active speaker. And don't worry about your kids in the background. It's fine.
Yeah, hi. Sorry, give me just 1 minute. My kids started crying the moment I started speaking. Just 1 minute.
Hey, it's a Saturday. Everybody's got kids and family on Saturdays, right? I don't have family or kids, so I guess that gives me an advantage. I got a cat though, and he just walked in the door, so I got to go close the door. Excuse me. Go ahead and talk amongst yourselves. What worked for you this week?
So I was just thinking, right? So I mean, I have like a normal accounts that I created for the regular stuff, and then my 401k. So I thought this might be, which I was just keeping at cash. So I was thinking, could this be the good time, to stop? Start adding my position in that 401k, because we are allowed to take stocks there, right? So I'm thinking like start taking the safe positions, like like Walmart and stuff like that, which is like completely beaten down, so that it doesn't fluctuate so much. What do you think? Or should we wait?
So you're let me understand the question first. Your 401k allows you to manage the money market that you're in.
Yes.
Oh, that's great. I've actually not been in a 401k like that. So if you're able to actively trade it, I mean, that's great. If you're making gains and stuff like that, be careful, because that is your retirement. I personally, my career has been up and down. I've had a long, arduous career, but I had 401k money in the past that I've ended up having to, pull out just to pay the rent sometimes. And right now I have zero 401k. So I'm kind of in the boat of one of these Americans who kind of slip through the cracks, right? I'm not insured, don't have 401k. I kind of fend for myself as a freelancer, and that means I pay for all that stuff myself. And if I'm not sick, I don't pay for it. And if I'm not, like I was talking about earlier with subscriptions, I'm not a rich man, so I have to look for free solutions for stuff. And if you're able to trade your 401k and you're having success in that, I wish I had that advantage. But again, I would be pretty cautious with that. Maybe.
So you suggest to keep more or less like, we have two choices, right? One I manage, or second is like take those targeted funds and, forget about it, right? So like whenever I'll be 60 or 70, whatever, right? So I just thought, somehow my bad, couple of months back when I thought, it's just a big bubble, and I took the money out and just kept it as cash. So I thought I'll put it back, but I kind of lost whatever 5-7% based on that, right? So now I'm thinking to start adding positions like for the big dividend kind of stocks in 401k and just keep trading once different, right?
Okay, so you just touched on something very wise right there, and that is, with 401k stocks, and this, I have a Charles Schwab account that was my 401k. That's where all my rollovers went and things like that, and that's when I had to clear out. I resurrected that one, and in that account is what you're saying, things that are going to be long term, things that are going to pay dividends. Companies like Ford, companies like Chevy. Right now oil companies aren't going anywhere. So I have ExxonMobil because they might be down right now, but it's really cheap. And there's going to be a big battle between the oil companies and all this new electric, clean energy stuff going on. The oil industry is not going down without a fight. They're not. There's just too much money, and they pretty much control the world because of their commodity. So with the 401k one, right now Tesla is a little bit shaky, but the long-term prospectus on Tesla is nothing but gains, because it's not just their cars, it's their software. But details aside, I think the question I heard, or not necessarily the question, but the important information I took away from what you were just saying was that for your 401k, it's good to keep it active and move the best stocks in there that you're going to. But I tend to think that those types of accounts are better for long term, long term, better. And right now, to me, like Ford is that one. I'm buying more shares like every time I can. And so you said you have a second account, right? So on that second account, that's the one that you're like day trading, and you've got money to risk, and that's your kind of like, that's your play net, right? You've got money that you said, I can risk all of this and not lose any sleep.
Right, exactly. Yes.
Right. So for that, at least in my opinion, my strategy would be to, as you make gains on that, you trim them off and you send them over to your 401k and you buy more shares of those dividend stocks, right? So even though this account, like you're trying to grow it, you can still take 10%, 20% of your profits each time, slough that off to your 401k, and you're still making a contribution every time, right? You're just slowly trickling money in there, but you're still, so you could be simultaneously building your fund net and skimming a little bit off the top up here to put into your 401k. So that's, I think, a pretty wise strategy. Sounds like your child is still in diapers, and so now is the time for that. Start thinking about their college funds and things like that, and then when that small nut becomes a bigger nut, you're dealing with, instead of 1,000, you're dealing with 2,500, you're dealing with 5,000, or you're dealing with 10,000. And then You know, if you're still taking off a percentage of each one, now your percentages are higher. So it just, the spigot gets wider, right? The valve opens more.
No, got it. I understand your point now. So rather than just think very long term for 401k and just keep taking money from the other number, I got it. No, thank you. Thanks for your opinion. Yeah.
I mean, it just.
So do you do like for example, so one thing which, I mean, of course, I'm frankly not a day trader because I have a day job. I do swing, and
Yep.
though I just take some positions and just enjoying the success on Zoom or OZSC and stuff like that, where I was able to get in too early. So do you? But let's say if I have a good amount, do you suggest or do you do usually these covered calls and all that, or I mean, because that's one thing which I haven't learned much.
Honestly, my best wins have been from this group. I found that silly penny stock screener app on Apple and found this WhatsApp group. And, honestly, I could show you like the day I joined, and then my returns went from being mostly losses to just absolutely astronomical gains. So I listen to, I put my ear to the ground and see what the wind is saying. I talk badly about StockTwits, but I'm on there all the time. I go on there to talk shit, like when I want, when I'm in a spicy mood and I want to go engage in somebody and just kind of, get in an argument. I can go there and do that. But there's also people there who are really good at giving advice. That guy Mark Alerts is one. There's a guy named Hatching Gains that I follow. And those kind of people are kind of like this group where they're making good recommendations. And I've, in paper money or even just a watch list, I'll throw in a couple of stocks that they have and see how they play. And if they play well, those are the people that I have the notifications turned on for, right? I don't have notifications turned on for every freaking stock to it because, oh my God, your phone would just not stop. But, for people who you kind of vet out over however long it takes you to feel like you can trust that they're giving you good advice and they're not out there to try to like steer you the wrong way and take your money.
Yeah.
Those are the people that, at least for me personally, those are the people I add for my alerts. And, let's just pull up StockTwits and I'll pull this guy's thing up and I'll show you what I'm talking about. Let's see, StockTwits. Excuse me. Right, so my rooms, best shorts, chart setups, but like this guy, Tickeron, this is actually a bot, and this one I like because the charts that they post, they give you a range, right? They let you decide which way you think it's going to go. But the cool thing that they do is they give you this little red and green range, so you don't like go too far or too low out of that range, and you have a chance to actually either take profit up here, or if you're selling short, you take profit down there. And the nice thing about that is it leaves it up to you. They're not telling you, oh, we think it's going to go this way. Where is that toggle? Here it is. I found this tool, which I like, but it's just, I'm still figuring out how to use it. I spent some time this week trying to, see what information I could take from it. It's called Toggle AI, toggle.ai, which usually you have a .com or whatever. It's unusual. But again, I can hook my portfolio up to it using Plaid. And it gives me these like diagnostic checks where the different stocks that I have in my portfolio, it'll tell me like, these are moving, these are not, like AMC over here, shows you how much of my portfolio it takes up right here. Shows you the last price, shows you their latest analysis based on their, they have several different classes of analysis that indicate signal, and those are momentum, technical analysis, key price levels, entry points, things like that, volatility. So things that, terms you're used to hearing, but they actually have signals that are built on those that are categorized by that. So for AMC, we had 2 alerts this week that came in for me. One of them was a momentum alert. So if I click on that, what you see is kind of like we were looking at before, where it's a predictive model, right? So right here where the solid line stops, that's today. And this is what their AI predictions based on all this back testing that they've done predicts, right? This is where they predict the price is going to go over the next 6 months. That's what this horizon is, 6-month horizon. They expect it's going to go and end in 6 months at 1409. But you can see that they also see, you know, it's going to go up as high as what, $16. This is good, at least I've found, for, you know, having hard stops and things like that. I don't know what your experience has been, but a lot of early advice I took when I was studying and learning how to do this stuff was, you know, always never open a trade without setting a stop loss. Well, I've lost a lot of money on stop losses because I set them too tight, or, you know, I found that like a trailing stop loss, and that's a different discussion, but trailing stop loss is usually 4%. But, you know, stop losses are tricky because if something drops or you get a certain spike down and it hits your that limit price, you're out, and, you know, boom, it goes back up, and you're standing there, you know, holding your dick in your hand going, what happened? So I've found that at least recently I haven't been setting stops, and that's also, I don't know if that's working against me.
So that's one thing I was actually about to ask. You answered there, right? So because stop loss is one thing which I am also struggling with. Somehow I haven't set stop loss, and frankly, I mean, I end up being a bag holder for a while. But somehow maybe my picks were like that I was able to recover a good amount back, right? So
yeah,
something
right.
like, for example, CIDM or something like that, or, you know, Zoom, right? So if I would have stop loss, I would have been down. So what is the usual strategy of stop loss that you follow, right? Is it 5%?
Well, I think that, you know, if the market is less volatile, right, I think that stop loss would come back into play, right? I only want to lose $10 on this if it goes down, but I think it's going to go up. So, you know, but, you know, again, I've just found in my experience that I end up losing just because it'll hit my stop loss. I'm out, and then boom, it's gone. And I'm standing there watching the bus drive away. Okay, we got about 10 minutes in this session. I'll continue it if it feels like we should. I'm not sure how many people we still have on here. Oh, we got a good number. But back to what we were saying, you know, so what I found, and this worked really well with QS. I'll pull that one. Well, before we go, I'm just gonna, I want to use this as an example here. So let's look at the 5-day. I mean, look at this. We're talking let me see here. You know, you're talking a 10% change right there. So I mean, the gap right there from here to here, where's that ruler? Just the gap down right there from aftermarket was 5%. So if I had a stop loss of 5%, it would have literally kicked me out at open, and then, you know, it might have dropped down. Anyway, this might not be a great example because Zoom has been going down. It's a good one for short, but again, like if I had gotten in, like, say here, right, and I watch it go up, and I didn't get out here, and, you know, if I had set a stop loss, or let's say I watched it come up here and I got in here and I didn't set a stop loss, you know, I'm watching here, it's all green, it's all green, it's all green, it's all green. Then it drops down here into the red and I'm panicking. right? And this is something that kind of I wanted to bring up about the group this week, is that people start seeing red and they're like, oh my God, I'm losing. I've lost 3K. Ugh. No, it's just you're watching you're waiting for it to come back to you and then go green. So again, if I had bought here, I watch it go green, and then I watch it go to just a little bit of green, like, oh no, and then go back up to green, oh yeah, and then bounce around, and then all of a sudden it drops down. I'm like, oh shit, I didn't put a stop loss on it. The where's that ruler? The most it dropped was 5%. 4.8 round up 5%. If I had had a stop loss for 4%, I would have gotten kicked out. And then while this bounced back up, I would have been missing out on all this. And so this is the point I'm getting to, is that the advice that I took early on, which was don't ever get into one without a stop loss, I found it has proven to be not good advice, right? It doesn't work for me. And so what I tend to do is I'll just get in at whatever price and let it ride. So, like in the case of fucking Sundial.
But you're talking in terms of the big stocks right now, right? Think about penny or those micro penny. If we don't have stop loss, you can lose the whole damn thing, right? I mean,
yeah,
pump and dumps.
Let's look at HCMC. That's a great example, right? So here, 32 cents to 16 cents is 50%.
Exactly.
If you have anything in there, you just lost like everything. And so again, with the pennies, like, what are you losing, right? For a penny stock, what do you throw at? $100, $1,000? You get 1,000 shares, 10,000 shares. I mean, you're already risking that. So for penny stocks, for me, I usually don't get more than a couple hundred, just to see how they're going to behave, right? Because if it behaves like this one's doing, where it goes down 50%, it's just like, well, there's no harm in letting it ride, right? Because it's probably going to come back up. Every stock wants to be a big healthy kid that makes more than a penny.
Yeah.
And sometimes you just have to wait for the interest to be there. So again, with the pennies, I will not set a stop, because if it goes down to, and not only that, but we're talking about a precision that's lower than a lot of the brokers will let you enter into their app, right? So I can't set the limit for 0.01805, where some brokers will let you.
Yeah.
And that's, while that's an infinitesimal amount of money, if you're talking about 10,000 shares, you're talking about $5 swing in either direction for every tick. So
makes sense.
So I mean, back to, I think the question was for penny stocks. I don't think you're really risking that much. Maybe you are, but I don't risk that much in it, and so I don't really I don't consider a stop loss beneficial. Now, I was going to point out QS in the play that I did last week, and this one I'm going to have to look at like the month chart, because 3-month chart, because I had this one back in December, and I had gotten in like here, right? And when it was on its meteoric rise up, and I was like, oh yeah, oh yeah, oh yeah, and then boom, like a couple of days later, it was back down. And then this whole time, let me just put a horizontal line there. Boom. Right, so I got in and it was going up, and then I was like, yeah, and then it went boom, and I was like, oh, 0, and then it went way down, and I was like, oh my God, what have I done? And I had to wait. I think it's actually like this range right here, and I had to wait this whole time. Right, I bought it here, it spiked up, it hit this thing, I was like, oh no, And then I watched it like turn green a couple times, and then it was just red for days and days and days and days. And then all of a sudden, for whatever reason that day, it just sprung to life. And it was at that point where it went green. And I think I talked a little bit about this last week, but as the price was rising right here and it got to my break-even limit, that's when I started to consider my exit, right? And what I ended up doing was I ended up putting a OCO bracket, or one cancels other, so that there's two orders at the same time. One was I had set a very high limit up here at this back resistance level of about 75. And it hadn't seen that, and it didn't see that, but I was just like, if it hits 75, great. That's all, that's the profit that I want right there. Is this from here to 75 is 31%. That's a pretty healthy return. So I set the limit, I will call it the max limit at 75. And at the same time, on that same order, I added a trailing stop from 4%. And so the price was bouncing around down here, and the trailing stop ended up right about here, where this last resistance and support line, you can see that forms right here. So I put it at 4%, thinking, that's a good enough swing to where if it comes up, if it comes back down 4%, which it did, it kicked me out at like here, which is perfect, right? Because it's at the top of that green thing. Now, what ended up happening was it dropped back down the next day, and I got back in, and then I rode this one, and I knew, because it had already kind of found this range right in here, it was a pretty good chance it would hit 65 again. And so I did this little swing too. The point to all this, and we're running out of time here, we're down to less than a minute, is that it's just a matter of patience. It doesn't matter what the stock is, especially like, times are down, everybody's like, market correction, it'll come back. And I think that's our time. So
got it.
Go back to the disclaimer for the end and wait for the timer to click off. I don't think we need another session unless you want to just hear me rant and ramble for another half hour.
Thank you. It's always helpful to talk to someone.